final time this week. Let's do 55 minutes of business, going round the world of business. This is Business Incorporated, and here's what's coming up to you in the next 55 minutes. We'll get the perspective of the Bureau of the Change Operators in Nigeria on recent policy adjustments by the Central Bank of Nigeria. Believe it or not, a Food and Agriculture Organization says that global food prices dropped in January. Is it affecting you? And then some real estate investment tips for you for the year 2024. Welcome to the program. I'm Ini John McQuarrie. Let's start off from the global space and tell you that oil prices rose on Friday after OPEC Plus Group's decision to keep its production policy unchanged, but benchmarks remained on track for weekly losses on China demand growth and fears. Brent crude futures were up 50 cents, that's about 0.6%, at $79.20 a barrel, while U.S. West Texas Intermediate crude futures gained 47 cents, also 0.6%, to close at $79.20. The Brent benchmark had approached $85 a barrel in Monday's trading. Two OPEC Plus sources have revealed that the group has kept its output policy unchanged and will decide in March whether to extend the voluntary oil production cuts in place for the first quarter. The Organization of Petroleum Exporting Countries and its allies, that's OPEC Plus, which includes Russia, has output cuts of 2.2 million barrels per day in place for the first quarter of this year, which is announced in November. Also supporting oil prices was the U.S. Federal Reserve's decision to keep the benchmark overnight interest rate in the 5.25 to 5.50 range, and comments by the Federal Chair, Jerome Powell, saying that interest rate had peaked and would move lower in the coming months. Chicago wheat futures fell, weighed down by weak demand and falling export prices in Russia, while soybeans and corn also lost ground and were just above multi-year lows on the prospect of ample supply. The most active wheat contracts on the Chicago Board of Trade was down 1.2% at $5.88 for a quarter of a bushel. Prices fell 5.2% in January and are far from a three-year low of $5.40 that it reached last September. Soybeans on the CBOT fell 1.1% to $12.09 for a quarter of a bushel and were close to Tuesday's two-year low of $11.88, while corn slipped 1% to $4.43 for a quarter of a bushel and was near a three-year low of $4.37 that it hit twice during January. Grain prices are likely to remain under pressure as markets globally and locally battle the supply outlook for 2024 that's more plentiful than in the past years. And falling wheat prices in Russia, which still has a large surplus to ship before this summer's harvest, have kept the wheat market focused on Black Sea supplies. We're still talking about food now. The Food and Agriculture Organization of the United Nations, that's the FAO, reports that the benchmark for world food commodity prices fell further in January, albeit slightly, led by decreases in the prices of cereals and meat, which more than offsets an increase in the sugar prices. The FAO Food Price Index, which tracks monthly changes in the international prices of a set of globally traded food commodities, averaged 118 points in January, and that's down 1% from December and 10.4% from its corresponding value a year ago. The FAO Cereal Price Index declined 2.2% from the previous month. Global wheat export prices declined in January, driven by strong competition among exporters and the arrival of recently harvested supplies in the southern hemisphere countries. The FAO Vegetable Oil Price Index rose marginally by 0.1% from December, but was still 12.8% lower than a year earlier, reflecting moderate increases in international palm oil prices, offsetting declines in the prices of soy and rapeseed oils. The FAO Dairy Price Index remained virtually unchanged from its revised December value, standing at 17.8% below its value a year ago. In January, international price quotations for butter and whole milk powder increased largely due to higher demand from Asian buyers. Well, I bet some Nigerians will ask, did that dip in prices of food, did it get to Nigeria? Well, you can answer that. Well, let's go back to a very topical issue in Nigeria, still trending at this time, is the changes that the CBN has been dishing out in the last couple of days. Well, the bank eased rules on international money transfers, taking another step in freeing up its volatile foreign exchange market to attract billions of dollars being sent home by citizens living abroad. International money transfer operators, also known as IMTOs, can now quote the Naira exchange rate against the dollar based on prevailing market rates at the Nigerian foreign exchange market on a willing seller and willing buyer basis. But we know that a major party to this conversation will be the Bureau de Change. Yesterday, we saw that the Abuja chapter down-tooled. They refused to open in protest of the scarcity of dollar and all of that. Let's get their perspective more now. As we are being joined by the president of Association of Bureau de Change of Nigeria, Mr. Aminu Gwadabe, joins us virtually from Abuja. Mr. Gwadabe, good afternoon. Well, I hope we can have Mr. Gwadabe, as we know that change that was given to make FX rates flexible by the IMTOs came just 24 hours since the central bank ordered banks to limit their foreign exchange exposure. We discussed that yesterday on the program. And we also saw reaction by the market yesterday. We saw that in the parallel market, actually, the Naira gained value, but not in the official market. I mean, a lot of things to understand there. Now we see that the Naira is trading lower in the official market compared to the parallel market, which used to be the other way. But I guess it's just the early days of the policies that the central bank has been giving out. And as we see the different parties trying to adjust to accommodate the changes that come with it. Let's have Mr. Gwadabe now. Good afternoon, Mr. Gwadabe.
Good afternoon, madam, and thank you for having me. Good afternoon, Nigerians.
Great, good to have you. So, the latest of the changes we're seeing in the FX space is that IMTOs can now, use prevailing market rates for transactions. How does that affect the BDCs? Or first, let's start from yesterday. The Abuja chapter of the BDCs say they down-tooled, they did not open, saying that because there was scarcity and all of that. But, I mean, what do you hope to achieve? You are in Abuja. What's the aim? Did you get it? Are you back in business?
First, I want to put a caveat that position is not the position of the central organ of the association. It is a position of the Zone 4 Traders Association. However, that was made as a result of, frustration, agitation. But as a licensed operator and also regulated by the Central Bank of Nigeria, we have channels of communication with the Central Bank of Nigeria, with security agencies. There are a lot of commitment. So it will be the least option that the association can take to shut their own offices. We, however, disassociated ourselves from that, and I'm happy, even those that have taken that decision, they have resumed to business today. Because there is no way you can help in the system when you are even outside the system. So we have intervened, and everybody have resumed back to business.
Okay, then, so the other part now, the flexible price or rates for the IMTOs, how does that affect you? How do you see it affecting supply, which is our major challenge?
is all towards achieving the new policy thrust of the government, which is the unification of the exchange rate. So, and that in achieving that, we must have a backbone to support that policy thrust. And one of the backbone is the liquidity in that market. We have made mistake when we first announced the policy without having to understand the different sources, their volumes and their frequencies into our market. However, now that we have discovered, it's a good news to start seeing policies that will ensure that the market is robust, is transparent, and is accountable. It was also done to remove some malpractices. At least it's a vindication that there is some white-collar criminality in terms of even ownership, in terms of regulation, in terms of operation of the I&E window. So in summary, I see those surplus, the cap on IMTSO exchange rate, then the net open position of banks in a way to ensuring competition. Number one, we begin to see competition between the inflows from IMTSO and then the cash deposit in the bank vault. And that is expected to usher in Naira stability. Two, it also means that the I&E window is at the point of cancellation or abolition it totally. Because for you to achieve market forces, in that situation, whatever vehicle we are using or the mechanism, like the I&E window, it has to be separate from ownership. Those people that are owning it should be separate from those people that are operating in the market. So liberalizing that means that is like a willing buyer and willing seller, no any external influences that should determine what is the price discovery of that market. So for us, is a welcome development because, for instance, even on the IMTSO window, because of this liberalization, we expect about $800 million in the first 1 week to 2 weeks, if it is fully implemented, that will come into the market. This apart from the already speculated $5 billion that is within the banking vault. So put this together is going to drive liquidity. And all along, part of the problem or challenges we're having as we read the change to access all this window is liquidity. Ab initio, they have been diverted to the parallel market. So now that is being liberalized, the IMTS should be expected to bring in these inflows into the official window. It is also expected that regulatory authorities will now use windows. One is utilization. If the money comes, who do you give to ensure that it's proper utilization of this money? The BDCs over time have proved to be the most effective transmission mechanism of central bank in terms of achieving the exchange rate stability, also in terms of demand measures, in ensuring tracking of demand measures. The BDC can do that through the satisfying of the invisible transactions of travelers, invisible transaction of school fees, invisible transaction of medical fees, invisible transaction of mortgages and subscription payment. In other climes like the UK, the role or the operation of invisible transaction, like school fees, like medical, is done by the Bureau de Change. Even to some extent, post office are doing that. So this is the time to have a paradigm shift. We have seen the implication of suspending Bureau de Change. In July 2021, when the Bureau de Change are suspected from the market, that's one of the beginning of the major lacuna that we are seeing today, because it has driven out the liquidity in the market, because the BDC remain gamen in ensuring the transmission mechanism of the central bank policy. It's just like there's an increase in interest rate. The central bank will now use the deposit money banks to ensure that policy is being transmitted. The banks are used as the mechanism to transmit that policy trust. Something, if you want to achieve exchange rate appreciation, the BDC remain the most effective in transmitting that policy trust of the central bank. Like I've said, when we are suspended in 2021, by then the exchange rate was about 450, 500. In 2 years now, we are talking of deviation of over 200%. plus that from that 500 naira to a dollar to about 1,500 naira to a dollar as we speak. So, however, there are some certain impact that the policy have started generating. At least we have seen dollar appreciating with almost about 6% to 7% from 1,530 before the announcement of the policy to 1,430 after the announcement of the policy, just after 48 hours in a state. So we expect further positive in the market. We expect further positive impact in the market. We are also calling on the both regulatory and fiscal authorities not to go and sleep, to continue to intensify. And how do they intensify? And this is how I said, how do they inject that liquidity into the market? You can only inject that liquidity to the retail and through the bureau de change. So according on them, this role of our third leg, because if you are talking about FX market, you talk about central bank being the first line, you talk of the money deposit banks, the next leg you talk is the bureau de change. So that concept of even the IE window of liberalization, because it's painful. What we're seeing now, most of our businesses are being, for instance, given to IE window, to IMTSO. We have liberalized their rate, and then yet the BDC is not included into the scheme, into the framework of the market. So its government is important, it's an immediate recommendation so that the retail market can be liquid and the price will continue to fall.
So how do you, from where now do you see the BDCs getting injected into the equation at this time with the scenario that we have?
Thank you very much. It's not the first time. In 2016-17, we had a recession. Even the CBN reserve buffers is not strong enough to support the BDC window. And the day management, with the collaboration of the Bureau de Change and the IMTSO, come up with a framework whereby the IMTSO can be inflowing this money to the Central Bank of Nigeria and the Central Bank of Nigeria. We started with the banks. However, because of some challenges and also some operational difficulties, the BDC were not accessing this money. That was the first directive by the Central Bank. Hey guys, this inflow that is coming from you, from the IMTSO to your own deposit, use it to be sold to the BDC at the at the liberalized rate of around 250 then also. And it started working, but operational challenges come to mind. That's when even the central bank have to take it over from the banks. Any amount you receive, remit to us, and based on that, we allocate to BDC, and BDC will begin to assess that proceed and then inject it into the street and bring down the rate. So it's not a new thing, it's not a rocket science. The framework idea is only to revisit those framework and ensure there's implementation.
All right, thank you so much, Mr. Aminu Gwadabe, for those recommendations that you have given. What we all want is to increase liquidity and get the real value of the Naira, at least one that will increase our purchasing power. Thank you so much, Mr. Gwadabe, the President of Association of Bureau de Change of Nigeria. All right, but even when we talk about the Naira, of course, we talk about the value that it has, and everybody's looking for how to increase that value, your purchasing power, the value of Naira. Obviously, they are related. Now, in Nigeria, the real estate market is anticipated to achieve a value of about $2.26 trillion by this year end among the various segments within the market. Residential real estate, however, holds the largest share with a projected market volume of 1.93 trillion Naira by 2024. So talking about where you can put your Naira and add value and increase your purchasing power. So how can you go about this? We have joining us in the studio, Felicia Ogbonna. She's the Chief Executive Officer of Bonner Denholz International, and she's talking to us on investment opportunities in the real estate. Hi, Felicia. Good afternoon.
Hello. Good afternoon. Thank you for having me.
Yeah. So, we just talked about the Naira, the falling value of the Naira, which is a challenge for everybody.
Yes. Yes.
Can the real estate offer a hedge against the falling Naira?
We are actually in a very peculiar situation right now. You know, the macroeconomics is not, you have factors like inflation, devaluation, high interest rates. Those three things are bad mix. So when we look at what is happening right now, the question we're asking is, can the real estate hedge the Naira? I don't think only real estate can hedge the Naira. But there are ways we can go about still using real estate to hedge the Naira. I'll give you a very simple example. Okay, in November, a property was sold by one of my colleagues for 400 million Naira at Ikoyi. And he purchased it, but at that time, the value of the Naira was about 1,000 to $1. So we assume that that was 400,000 US dollars that individual invested. Coming to this year, that same property has increased in value to 550 million. But with the steep devaluation, we now have, if you convert it at 1,500, we're looking at 366,000 US. You've lost 34,000 US dollars if you did that investment. But all hope isn't lost. There are still ways we can mitigate this problem, even with real estate. One of my advices would be, first, try to diversify your portfolio. Do not only invest in real estate. You can also buy some government bonds, especially foreign government bonds, like the Eurobond. Now, if you're going to get into real estate itself, do a little bit of homework. Do not panic buy. Because where everyone is on edge right now. So do not panic buy. Buy as an informed buyer. Get to know where you still have some of those margins. And this is what I will advise you. Try not to buy properties that have just been newly completed, because they've priced in inflation into it. So the older properties are actually where you can still get some kind of value for your investment. And at the same time, also do not buy properties that you will not get income from. Because even though there is appreciation, if you can also take advantage of the rental income as well, you will be doing yourself a good favor. So it's a yes and a no, but diversify your portfolio. Do not only buy one type of property, go into a bit of commercial, and that would be my take.
Yeah, so obviously that's why the report shows that the residential real estate investment is going to get bigger, and it's a way to go. But what about, how can somebody cost the fact that you get a property and you live there?
Yes.
How do you make that profitable to you? Because you have to live somewhere before you can now have an investment where you can rent out to others.
You can still buy a property, and that's why they always talk about income properties, where you don't have to live in on the whole property, on the whole premises. You can sublet part of it, and this is not the time for you to be buying emotionally, and say, no, I need a large room, or I want a big bedroom and all. You have to buy as a business person. If you buy for your family, one thing that you will gain from is the appreciation of the property, regardless of the devaluation of the Naira. Yeah.
But I think one discouraging factors when it comes to real estate in Nigeria is the documentation process.
Yes.
You read about a lot of fights, questions, fraud, especially because the documentation process is either too expensive or too cumbersome. You have to go to government offices and settle government officials or so, and this obviously can be a put-off for an investor.
Definitely. We've come a long way with documentation. I must give some of the state governments kudos. I know of Lagos State, they've invested quite an amount of money in digitization, but we're not there yet. A simple example, for if you wanted to do a search on your property. You go to the land registry, you apply for the search, and they put you in an office where you use their computers. Some of these things can be improved upon. There are so many stakeholders that need that information. The banks need it to approve loans. Architects need it to design.
And you're an architect too.
Yes, I am an architect.
Share with us your experience. Share with us your experience. Reality.
Yeah, it's daunting because to get simple information out, sometimes you need to go through several layers of individuals and a lot of bureaucracies. But like I said, we have improved, and there's still room for improvement. So that simple example. We can get all these stakeholders to register with the lands department, and they can subscribe from their offices. They get access to this information. Another very, very difficult period is when you're purchasing or acquiring property here. What happens is this: you sign a title, a deed of assignment. It's signed between the two parties, and the seller collects the money up front, even without the governor's consent being, finalized. And the buyer is encumbered with finalizing those documents. Somewhere in a place like South Africa, when you buy a property, the seller does not get a dime until that property is transferred to the new owner. The money is put in a trust account with it's earning interest rates. But it's going to be difficult to do that even here because we do not have set times for these processes. We all know that, the set time back there is a month to 3 months. So you know what you're getting into. There's also a lot of ignorance where the public, we don't even know how to go about these processes. You have to always liaise with agents and go. So I'm hoping that even as we are trying our best to make it easier, we fast track it because the pain is quite enormous.
Yeah, and discouraging for investors.
Yes.
And then you also have this group of people. There are some businesses now, the real estate companies.
Yes.
I know you must have heard of a recent one where I think mostly those people, well, some of them have gone into the contract of, what do they call it? Installment payments, and then they're given a time when they would have hit a certain goal, and then they'll be given a location, and then there's a breakdown in that agreement. And, a lot of these people, they're not the big and mighty. Obviously, the rich guys would just drop their money and get. These are people who are low-income earners.
Definitely.
And so they don't know who will fight for them. And some of them just want to have a home of their own so that when they're not strong enough to, go to work and pay rent, they will have a place to lay their head. And you hear of such heartbreaking stories and another discouraging factor.
Yes. I'm a victim of something similar, where I purchased a property somewhere in Lekki for 4.5 million, just the land, a few years back. And I received a phone call early this year that I needed to raise 20 million.
Tell me about it.
For a value of, so it is still all about legislation, because these are some of the worrisome things that the people in the diaspora have problems with, where you get into a contract and when it is time to deliver, then we have all these hiccups. A lot of these companies that started this development should have insured those contracts. But what we're also faced with right now is a bit, it's enormous, and I'm not sure a lot of us have ever prepared for what we're going through right now in the country. So it is a deterrent, definitely.
And it sounds like a long way to go, because if you go into a contract and you're going, you don't have a lawyer, you don't have the government backing.
Yes.
All you have is a receipt from the seller.
Yes.
anything can happen.
Yes.
I mean, you've been told now to add 20 million.
20 million.
20 million.
Yeah.
I don't know what are you going to do about that?
Well,
you are an elite.
No,
so you can handle it.
I don't have 20 million. You know, I have two options. Usually I do not take the legal route because I can't afford it. It ends up costing you a little bit more. You've already lost
a lot
money.
of time.
Yes. So it's either you cut your losses and run, or you sell off plan. So there are people that the value of that land today is about 25 million. So I would rather look for someone that can pay 25 million for that property and sell it. So you have to look for a smart way to survive. That's probably what I'm going to do.
Unfortunately, it's a Nigerian thing, but
Yes.
there's a breach of contract there.
There is.
You have your rights there, which should be protected.
Yes.
And there's nowhere to go to. Because
that's where the documentation loopholes are in, where we need to put a lot of things in place. Because a lot of people have come up with schemes, gotten people's money ahead of time, but now there are no consequences for what they have done, you know.
A lot of work to be done everywhere. We're talking of the Naira discouraging. We're talking of oil discouraging. God. All right. Thank you so much. Thank you so much for joining us this afternoon. Felicia Ogbonna, the Chief Executive Officer of Bonadin Sell Horse International.
Thank you so much.
Thank you for your time.
It was a pleasure here.
All right. Let's take a break now. We'll come back and we'll have the markets waiting for you. Right here on Channels Television. We'll head to the markets now to get intraday numbers. And I see that the NGX, Nigeria's equity market, is back on that bullish trend. Anyete.
Yes, thank God it's Friday. And of course, the NGX is back in the green. And that comes after, today is the fifth trading day in the week and the second for February. So, so far we had about two back-to-back sessions of profit taking, and then of course we fell below the 101,000.
Yeah, we stopped at 101.
No, we closed yesterday at 102,000.
Yeah, we had 101
exactly.
for the pullback, and then we got back to
the 100. And now we're at 103,000.
Congratulations!
So we're still climbing above the 100,000 level, which of course we celebrated. And so far, month to date, we're at about 37.5%. So now let's take a look at our intraday market numbers, starting first with the equities market across the African region, the major ones in particular. Nigeria Stock Exchange, the NGX All Share Index, 103,845.81%, which you can see on the screen there, 1.02% at intraday. The same thing for South Africa's stock market in the green, 0.68%, more than 0.5%. Now, for the other side of that market, we see Egypt also in the green by more than 0.5%, while Kenya was the only laggard, but that's as at Thursday, it was in the red, 0.29%. And so far, it was largely driven by bank stocks, which led that rally, and then Bua Foods also added to that. So far, month to date, which is February, we're at 1.6%. And of course, the market, we're still expecting that this trend that we saw on the screen will be sustained even into as the new month begins. Now, let's talk about the Naira, which has been in the news so far. Within this week, we've been talking about the Naira's parity exchange rate against the dollar, as well as other foreign currencies. But now, so far for the Naira, it has depreciated about 37.6% at the official market in January. But recently, as of yesterday, we saw a bit of a reprieve for the parallel market. But for the official market, we'll be talking to Bosun Obembe to give us details about that. And Bosun, thank you for joining us. So let's take a look at the Naira. Hello, Bosun, can you hear me? Okay. Please, kindly unmute your mic, please, so that we can hear you. Hello, Bosun?
I can hear you.
Okay. All right. Okay. So now my question first, it goes for the Naira. You know, at it's the last trading day for the week. So now the Naira at the Nigeria foreign exchange market, how is the Naira trading at the moment, where we saw a bit of a downturn for that official market and then a rebound for the parallel market? So give us details about this at intraday.
So for Naira is a good news. I think the appreciation that we've been expecting, the money bags, the offshore that we've been expecting to bring in the funds, I think they are back. So I can tell you that confidently. So maybe what you've seen yesterday, initially when CBN started bringing policy, this week has been a week of policy. So CBN came up with a policy removing the cap on which IMTO can buy fund. Before now, it used to be plus minus 2.5, but now they removed the cap, which gives the IMTOs opportunity to compete favorably with some fintechs. So we also the most important circular that came out was the removal of the harmonization of the reporting requirement for the foreign currency exposure, which means that banks are not required to keep any long position in their balance sheet, but they are allowed to. They can go as short as 20% of their shareholders' fund. So what this entails is banks with a long position in their balance sheet, they have to sell it. So as a result of this policy, so what we saw yesterday from the offshore and what we've seen today, we've seen a lot of trade. Market started with 1.5, then later we started seeing a lot of offers at 1,004. We saw transaction trading as low as 1,003. So I can tell you confidently that even the fixing, which you saw yesterday, today it closed at 1,444. So from 1,477.8 yesterday. So I will continue to see this gradual strengthening of Naira. So at least if the CBN is consistent with this policy and ensuring that full liberalization of this the market, I think by next week we should get to maybe 1.3 or 1.2.
Okay, so now you mentioned something about the adjustment of the Naira. Within the week, the CBN had adjusted the official rate from 951.94 to about 1,356 against the dollar. And now there are concerns that this will make the Nigeria's current inflation rate, which is at 28.92%, to go even higher. So what's your perspective on this?
No, what happened during the on Friday was a change in methodology for computing the fixing, which is called NIFES. So before now, you have a lot of trade that are not a arm's length transaction happening at 800, 900. So by the time the computation is done, all those trade done at lower rate, they drag down the rate. You see rate closing at 900. Meanwhile, the actual transaction are happening at 1,004, 1,003. So what the FMD and CBN has done is to actually remove all those outliers while ensuring that the market reflects the actual rate at which arm's length transactions are happening, which has actually been a good one for the market, because before now, you see the official market, you see 900, meanwhile the transactions are happening at 1314. So, but now that we have one rate, and the offshores are happy with it, the FDI are bringing their fund, and with the new circular that's come out today by the CBN on the CRR, where they are going to the orthodox method. Before now, they can just debit bank maybe CRR daily, but they want to stop that and start debiting bank maybe weekly based on the average increase in their deposit. So with this, banks can actually plan, and expectation of this is interest rate will go up on the security. We have an NTB auction coming next week. But now, what CBN has done or FMDQ has done is to ensure that the closing rate at official market reflects where actual transactions are happening, which is a good one for the market.
Okay, Bosco, I think we have to leave it there because, of course, time is on your friend, but we need to look at other markets. But thank you so much for your analysis on the Naira and then for the fixed income market as well. So, Bosco Bembe, Forex and fixed income dealer at Access Bank, giving us details of those markets. Now, let's move over to the Middle Eastern markets, where we see the markets were a little bit in the mix, but we have the Saudi Stock Exchange closed, as well as the Qatari Stock Exchange. But for the UAE stocks, they were at intraday in mixed session 0.09% for the Abu Dhabi, while the Dubai FM was in the green, as you can see, 0.10%. And now for the world's biggest economy, the United States, the stock futures there were in the green, and this is coming after the trio of Amazon, Apple, as well as the parent company of Facebook, Meta. They released their earnings, which show that Meta posted about a 17% increase in its quarterly results. Amazon's shares also jumped by 6% on the very impressive fourth quarter results, but Apple's shares, they were down by 3%. Now, for the futures of the markets, for the Dow Jones Industrial Average, which is where the industrial companies are listed there, the likes of Chevron, the likes of ExxonMobil, it was down by 0.04%, while the S&P 500, the top 500 companies on Wall Street, it was up in the green, 0.51%, while for the NASDAQ, where the tech heavies are there, it was in the green. Now, for the look ahead, the investors will be looking out for the January jobs data, which is expected to come in at about some 185,000, as well as the unemployment rate, which is expected to inch higher to about 3.8%. Now, for a review of Thursday's trading for Wall Street, let's have our Washington correspondent Maya Bird to give us details about that market.
The U.S. stock market rebounded on Thursday after what many called the worst day of 2024 on Wednesday, as the Dow Jones Blue Chip was up by 1%, the S&P 500 up by 1.2%, and the heavy tech NASDAQ took a rise of 1.3%. Many investors are still wrapping their heads around what the Federal Reserve Chairman announced and is stating that it might not see interest rate cuts until later in the year. This announcement has many investors a bit concerned, but it allowed them to find ways to have new insights for the upcoming year and more promise for the U.S. stock market. This news might have been disappointing to investors, but there's still much hope for interest rate cuts in the near future before the end of 2024.
Thank you so much, Maria, for that update on the U.S. market. Now, finally, let's go over to Asia, where we see a bit of a mixed picture there. Well, first, it was the South Korea's Kospi that led the gains on the market, 2.87%. That's what it printed, and that's because we saw some results being released on that market. Then the Nikkei also made a rebound from the previous session, 0.41%. Hong Kong's index, that's the Hang Seng index, it was in the red, 0.21%, while the other markets, the Shanghai Composite, China's Shanghai Composite was in the red, while Australia's S&P ASX 200 was in the green, 1.47%, and they all tracked the the outcome of Wall Street performance for Thursday. So, that's it for the markets, and then we'll be looking out for the U.S. markets, Nigeria stock markets, as well as European markets. All the markets, Asia is closed for the day.
Yeah, well, I guess by Monday we'll have to do that. Thank you so much, Anita.
Pleasure.
All right, now let's move to Europe and see what's happening there. And unfortunately, it's not a good one. Germany is experiencing widespread flight chaos as airport staff strike for higher pay. Doesn't seem to end at all. Major airports, including Frankfurt, Berlin, they are facing extensive cancellations and passenger delays. Let's have Ikram now join us to tell us more about this. Hi, Ikram. Not a very good one in Germany at this time.
ELS failed to reach an agreement. The main demand of the workers is an hourly wage increase of €2.80. And BDLS spokesperson said they had made an offer of 4% pay rise for this year, followed by a 3% pay rise next year, but the union's demand was unaffordable. Meanwhile, Verdi and these workers are calling for what they see as wages that better reflect how important they are to the functioning of the airports and to air travel.
What the do if they don't get this? Have they said anything about that?
Now that the mystery over Fed's rate cut plans are over, investors turn their attention towards US job figures, which could raise the bets for earlier rate cuts if they turn out to be below 4%.
All right, Ikram, thank you so much for that, and do have a great weekend. Well, it's everywhere. Trouble is everywhere over there in Germany too. They're having that problem. Let's come back to the African continent now. We'll start with Egypt, where the country has raised interest rates for the first time since August, breaking expectations with a move that might speed up progress on a bigger rescue package with the International Monetary Fund and set the stage for another devaluation of the Egyptian pound. The Monetary Policy Committee increased its benchmark deposit rate by 200 basis points to 21.25% and the lending rate to 22.25%, according to a statement. Only Goldman Sachs Group and Morgan Stanley predicted a hike in the poll of economists, with the rest seeing no change at all. And this might be the reason for that unexpected hike, because the International Monetary Fund has said it has agreed with Egypt on the key policy component of an economic reform program, in a further sign that a final deal to augment the country's $3 billion loan is nearing completion. Ivania Vodkava-Hola, the IMF mission chief for Egypt, said both sides had made excellent progress on the discussions of a comprehensive policy package that could kickstart long-delayed reviews of the country's economic reform program. Earlier, IMF Managing Director Kristalina Georgieva had said that the fund and Egypt were in the very last stretch of negotiations to increase the country's $3 billion program. Well, Egypt has been in talks for the last 2 weeks with the IMF to revive and expand the loan agreement, which was signed in December 2022. IMF disbursement on the loan were put on hold last year after Egypt did not follow through on a pledge to let the Egyptian pound respond to market forces and instead fixed it against the dollar in March. The Egyptian pound fixed at 30.85 to the dollar since then has been trading on the black market as low as 71 pounds. So there you go. Perhaps another devaluation coming the way of the Egyptian pound. Talking about troubles in the economy, Zimbabwe's inflation rose in January 2024 as the depreciating Zimbabwean dollar pushed up the prices of goods and services. The Zimbabwe National Statistics Agency, ZimStat, said that the annual inflation rate for January rose to 34.8% from 26.5% in December, just within a month. Well, the month-on-month food and non-alcoholic beverage inflation rate was 15% in January 2024 before gaining 6.4 percentage points on the December 2023 rate of 8.4%. The January 2024 month-on-month non-inflation rate. And then the Zimbabwean dollar street rate as at Wednesday was between 16,000 Zimbabwean dollar for $1 to 17,000. On the formal markets, where they have the willing seller, willing buyer, the Zimbabwean dollar was trading at about 10,152 to $1. Trouble on currencies on the continent. I wonder when we can solve it. But let's head to the crypto space. Hope there's no trouble there. Let's have the crypto numbers and see how that's looking. I think the last I checked, the market was greedy, which should be a good sign to sell if you really want to. Let's see the numbers right there. Unfortunately, Bitcoin has made the board red at this time. Oh, even though the market is greedy. So Bitcoin is at $42,968.12, down 0.14. I think this is within 24 hours between yesterday and today. Ethereum is also down. Is it going to be a bloody weekend? I wonder. Then we see Doge and, well, let's see the prices. Thank God we have Solana in the green, Cardano also in the green, at least at this time. Let's see the prices. So Bitcoin, there you have it at 42. Ethereum also down. BNB down. Cardano up a bit. And then XRP. I saw a story about XRP and something about, a hack or stuff like that. Well, I guess that has also affected sentiment in the market. And then we see that it is down. We see the top gainers for now, the PYTH, the link, and looking at the numbers, they look impressive though. I guess all altcoins are here for now, So Bitcoin is taking a rest. So we see double digits gains, and then for the losses, not so much of a double digit. For the top losers, if we could have that, they're just the SATs. It has a 10% drop change in price. The others are single digits for the crypto space. Now let's have Solomon Amunde talk to us about some of his observation on the market numbers, the market price movement for the week. Hi, Solomon. Good afternoon.
Good afternoon, Amy.
So how was this week for the crypto space, ending with Bitcoin at 42,000? But the market's in a greed state.
Well, the week has been very much impressive. We've seen an amazing run from last week, Saturday, Sunday, when we were around $40,000. And this week being at 43K, it's been an amazing week for altcoins. I mean, lots of altcoins have done very, very well. We've seen good gains, 20%, 30%. And one of the top gainers, Zeta Coin, which has done almost 150%. So in summary, I would say it's been an amazing week.
Ask what coins you think investors could look out for this month. But before we go there, I saw the story of Binance freezing 4.2 million of XRP from a hack Ripple and all of that. What's this about?
Yeah, so basically, Binance does their own investigation and they try as much as possible to work with different projects and protocols to secure their funds. So in the case of Binance freezing the funds from a hack that happened on Ripple, much information hasn't been released about that, but we're hoping that within the weekend we would find out more details about how that happened. But so far so good. It hasn't necessarily negatively affected the price of Ripple. Ripple has dropped barely 1 to 2%. So I would say we haven't seen the negative impact of that hack yet. So all is still good currently for the Ripple ecosystem and the token itself.
Okay, well, we hope that the impact doesn't just pounce on us. But so tell us, you did say that for this week, the altcoins did well. Looking at the month, which has just started, February, what coins do you think investors could possibly look out for?
Okay, looking at a bit of fundamental analysis, the Chinese New Year would soon be upon us. This month of February, I think that's the biggest stuff that we'll be expecting. So we should expect Chinese tokens and projects to rally reasonably 15 to 30%, and the likes of NeoGas, CFX, and so many others. we should see them do reasonable gains in this month of February. Then aside that, we should expect some L2s, layer 2 blockchains, to also do pretty well, based on the hype around Zeta chain, which, like I said, has done almost 200% profit within the last 1 week. So that should also push some liquidity from Zeta chain to some other layer 2 projects. So those are like the projects I'll be looking into the month of February.
Okay, but I mean, as we always say, this is not an investment advice. If you want to invest,
Obviously.
you have to get consultation. How do you see Bitcoin coming out the other side of the week? How do you see it performing this weekend?
Okay, this weekend I feel we'll just consolidate around 41.5 and maximum 43.500. But later into this month, if we can go past 44K, we should see a reasonable spike to like 47, 48K. And once we are out of the month of February, I'm expecting some crazy dump from Bitcoin.
All right, Solomon, thank you so much for sharing your perspective with us, and have a great weekend.
Thank you.
All right, so I'll say thank you so much also for spending this 55 minutes with us. I hope we added value to your day and knowledge, especially investment, real estate or none, or is it crypto? But thank you so much for being a part of it. We'll start off again on Monday with 10 a.m. Business Morning on Sunrise Daily, 1 p.m. Business Incorporated. But I'll see you tonight for the stock market report. We'll see how the NGX closes the week. I'm John Mekwa. Have a great weekend.